Hello, everyone, and welcome to Fluent Financial's What You Should Know for the week of August 16th. My name is Mike Lenise, and I'm your portfolio manager at Fluent Financial. This past week, the S&P and the Dow finished up for the second week in a row. The NASDAQ ended the week down as interest rates steadily gained from Monday to Thursday following mixed inflation data, only to tumble on Friday. Why did rates tumble? The University of Michigan reported preliminary August consumer sentiment that saw one of the biggest tumbles in 50 years, coming in at 70.2 versus an estimated 81.2. Worries about the COVID Delta variant hit all aspects of that survey. The 10-year Treasury yield slumped 8 basis points to 1.29% on Friday, having been as high as nearly 1.38% as the reflation trade gained steam again. Other inflation numbers we saw this past week included the CPI at 5.4% versus an estimated 5.3%. That's the inflation gauge the Fed uses, as well as the PPI, or Producer Price Index, and that came in at 7.8% versus an estimated 7.2%. And both of those numbers are year-over-year numbers. The July unemployment report showed robust progress toward full employment, with 943,000 payroll jobs added and the unemployment rate falling to 5.4%. While nearly 9 million Americans remained unemployed, last week's JOLTS report showed the number of job openings now eclipsed the number of unemployed Americans by a remarkable 1.3 million. For those of us able to unplug from the news over the weekend, the Taliban has retaken control of Afghanistan after essentially walking into the capital of Kabul and setting up shop in the presidential palace. For the week, the Dow led major averages up 0.9%, while the S&P gained 0.7%. The NASDAQ came in slightly lower at negative 0.1%. And for the year, the S&P is up 18.95%, while our V&O stock portfolio is up 18.6%. For the week ahead, markets look to be opening lower on Monday morning, as the Dow Industrial Average traded down by almost 0.5%, while the WTI light sweet crude was down over 2.5%, around the 66.50 a barrel level. Investors will get some hard reads on the U.S. consumer this week, with earnings reports due out from Walmart, Target, Lowe's, and Macy's. Companies that we hold that are reporting this week include both Walmart and Target, as well as Home Depot and Cisco. Bank of America says the second quarter report from Walmart and potential third quarter outlook is going to be good, with back to school merchandise and general merchandising strength. JP Morgan forecasts that Target will beat its second quarter same store sales expectations at a 9% mark. Target has topped sales estimates in 5 straight quarters and trades at a slightly lower forward PE ratio than Walmart. In between those two reports will be the July update on retail sales, which is forecast to show a 0.2% decline from the June tally. On Wednesday, the Fed releases the Fed minutes, and central bankers will be poring over the nuances of that report, with varying viewpoints on bond buying tapering and the inflation outlook. The electric vehicle sector will be following Tesla's AI Day event, and more reverberations from the infrastructure legislation to certainly be coming over the week. The U.S. tech sector is on watch this week after China's 5-year blueprint called for a greater regulation of the economy, setting up potential for accelerated rotation away from Chinese tech stocks into U.S. tech names. Names that we want to keep an eye on include Apple and Microsoft, as well as DocuSign, NICE, and Pegasystems. For an options update, we are 4 weeks through the 5-week August cycle that expires on the 20th. Our stock income portfolio has generated 1.29% in covered call cash after selling 60% of the portfolio. As of Monday morning, 20% of the portfolio was in the money, and through the first 4 weeks, it had a performance of 3.12% versus the S&P's 3.25% over that same period. The Advantage portfolio also generates covered call income, but at a lesser entry point, and that portfolio has generated 0.87% in call income after selling 50% of its portfolio, and 35% of the portfolio is in the money. ADV is up 3.27% for the first 4 weeks of the cycle, again versus the S&P, up 3.25%. Feel free to leave comments or questions to this post, click the like button, and share it if you felt that it was informative. Subscribe to our YouTube channel and visit fluentfinancial.com for further information. As always, have a great week and thanks for tuning in.